I'm John Jenkinson. Happy Monday. Glad you're here with us on the Market Day Report. First of all, we had an overnight sale. This time, not soybeans, not corn. It was hard red winter wheat. 130,000 metric ton of hard red winter wheat going to unknown destinations. Then we had the export inspections shortly after that. And for corn this time around, it was a little over 1 million metric ton, just slightly over that. Over in the sorghum department, it was a little under last week's big number. And in the futures right now, let's go to the corn market here first. The corn market tells us we're 5 cents higher on that nearby September. The new crop December's up 5 3/4 at 343 3/4. And look at that, it's on the high of the day, as Marlon has been mentioning this morning. November new crop soybeans up 17.5 at 916 1/4, got all the way up to 916 3/4. So we've backed off a half a penny from the high of the day so far. Wheat for Chicago, December up 15 3/4, and that new crop July up 13 3/4 cents. And after that sale of hard red winter wheat this morning, we've got September Kansas City up 11 1/4 at 436.5. New crop July 471.5, that's up 11 3/4 cents. And in the Minneapolis wheat market, the new crop July is up 9 3/4 at 553.5. And December cotton is up 72 points at 63.57. As we say hello to Brian Hoop's Midwest Market Solutions here with us. Well, we've got another strong day over here to the higher side in the grain market. Is this all technical driven in your opinion, Brian?
Hey, good morning, John. A lot of this is news-driven. The news is fairly friendly, I feel, this morning, as we are expecting crop conditions to be down in both corn and the soybeans in this afternoon's report. I would suspect corn's going to see a major drop, but I think trade really going to be watching what's happening in the state of Iowa after those heavy winds that moved through the state last week. How many acres are actually impacted and how much yield will be impacted will be a determining factor in how high we can go. But then you have the Pro Farmer Tour starting this week, and no doubt the tour participants are uncovering some really good yields out of Ohio and South Dakota in the morning hours so far. But as they move into Iowa by Wednesday, Thursday, that should prove to be very interesting. The trade will be watching that closely. So a lot of technical buying, a lot of short covering coming into the market. Soybeans took out the highs for the month of July, which is pretty rare to do that in the month of August. We haven't done that too many times, but we're back to the highest levels since early March this morning.
Brian, what about if the crop tours and all of this information coming in maybe doesn't show as much damage and maybe things are better than what they were expecting? Does that open the floodgate to the other direction?
Yeah, that's certainly a possibility. I think, we're going to have a lot of this bullishness really priced into values here by Wednesday, midweek. And then, as you said, if things are not as bad or they uncover some better than expected type yields, and maybe in some other areas, we could pull these markets back off their highs. So, this is the time of year where you want to start making some catch-up sales. If you normally like to be, say, 50% sold going into harvest, you're not quite there yet. This is a good rally to get caught up and make some sales and start looking out into the future that, if you have maybe lost some bins because of the heavy winds or whatever the situation, that this is an opportunity, I think, that you want to make sure that you're catching up on your hedges.
Ron, I'd really like it if you'd stick around and visit with us about the livestock trade. That's coming up next here on the Market Day Report.
You bet. Sounds good.
Last week, we had anywhere from $1 to as much as $5 higher cash cattle trade. So let's see what's going on in the live cattle market here today on this Monday, on this day of the show list. That's the list of market-ready cattle that feedlots put out that packers come and look at to see what's available for sale. And we've got the August live cattle contract up 50 cents a hundredweight at 108.10. The October's up 72 at 110.95, and these futures are provided by Bar Chart. In the feeder cattle market, we are up 12 on the August at 144.05, September down 30 at 146.27, but October, November, and January are all higher. And in the hog complex here today, we're higher here as well. October up 32 at 53.35, December up 12 at 54.75. What do you think, Brian? We've got this show list out here now. And now we're pushing almost 110 over here in the futures. Who's leading who here, the futures or the cash?
Yeah, there's a little bit of talk starting to circulate that maybe the boxes are going to peak out here relatively soon, as some of the Labor Day buying has been completed already. So, boy, we may start to see this market run into some resistance. I was hoping we could get another $2, maybe $3 out of the October, February, December boards before we looked at a lot of aggressive hedging strategies. But the box is top. The cash market may peak as well. So hopefully we get another run this week. We can get the futures up another couple dollars, and that may be as much as we are going to be able to stretch this cattle market.
All right. Well, let's move on and talk about hogs here today then as well. This hog complex has just kind of firmed over the last week and a half, and we still seem to be firming. Case in point, we've got that May contract, all the way up to $70 now.
Yeah, as we start to look out into the future a little bit, some of those deferred contracts are starting to gain a little bit of steam. As you said, May is at 70, June is back into the 75. So we're kind of working through some of that big gut of supply that we have. But I think producers want to keep in mind that this market is offering that incentive for the producers to continue to feed their animals out, and they will continue to offer that. And as we get closer to that time frame, we can easily take that premium away. We can turn 75 back into 55 pretty quickly, as we're seeing in the fall contract months that are directly in front of us when producers are going to start delivering their cattle and their hogs. Yeah,
well, and I'm glad that you bring both of those up. Have we worked through the big oversupply that we've been talking about since coronavirus got started?
Yeah, I think we're in the process of doing that. We thought it would take months instead of weeks, and we're certainly in that process where right now we're working through the hog supply. The cattle market, I think we definitely have, and that's why we've seen such a strong rally in that cattle complex. We may start to see a little bit of Friday's numbers of placements anyway, start to see an increase of cattle being placed in the feedlots, and that's probably going to take away some of the demand trends for the feeder calves. And if something's going to break, it's probably the feeder cattle that will start to lead us to the downside.
President Hoops, always a pleasure to visit with you. Thank you very much.
Thanks so much.
We'll talk to you again very soon. And over on Wall Street right now, the Dow Jones Industrial Average, pretty quiet here, down just 5 at 27,787. Christina?